welcome back to Block TV, where it's time for Blockheads. So every day we round up the top headlines just for you. And to run us through today's top stories, we are joined by our very own Whitney Deal. Whitney, take it away.
Thanks, Yael. Forbes informs us that data shows Bitcoin has radically changed. Cointelegraph reports Seoul to implement blockchain in citizen cards, the mayor reveals. Cointelegraph also details UK Watchdog reports $34 million lost in crypto and Forex scams last year. BTCmanager.com brings us the latest on crypto gaming with CryptoKitties founders launch blockchain-based game on Cheeze Wizards. CCN updates us on the latest from the SEC with SEC punts on Bitcoin ETF as unfazed crypto bulls dig in their heels.
Brilliant. Let's break these down before we get to the one that I'm really interested in, CryptoKitties, as you know. Okay, but let's talk about Bitcoin radically changing. Yes.
It's no secret, of course, that Bitcoin is greatly in the public eye over the last few months thanks to price surges and positive developments in the crypto sphere. Bitcoin, which rose from almost $1,000 per coin to almost $20,000 per coin in 2017, floundered in 2018, but has now seen a rebirth as of late.
You can say that again. I mean, definitely an amazing couple of weeks, to say the least. Yes.
And now, according to an article released by Forbes, research from data provider Indexica has found that Bitcoin has matured as an asset, and there has been a coming of age for Bitcoin. Indexica found that Bitcoin now is being spoken about in the same way a company talks about stock, with those in the industry increasingly looking ahead to future developments.
It's actually amazing that it comes in Forbes. At the end of the day, though, one needs to have also some federal agencies agree with that. But yes, definitely maturing and and mainstream. Go ahead. Yes.
Seoul in South Korea will implement blockchain technology in its citizen cards, which are national IDs, according to a report released on May 20th. The mayor of Seoul has been very active in reporting on the city's achievements in embracing major technologies like blockchain and AI, and highlighted the role of blockchain in storing data, noting that the value of data has become even more important than before. The city will implement blockchain in collecting urban and administrative data to enable new sources such as integrated authentication of the cards, as well as tools for easy access to various administrative services. This development comes on the heels of a late 2018 announcement in which the mayor introduced a 5-year plan for developing the blockchain industry in Seoul, with the city government planning to invest around $12 million into an $88 million blockchain fund. And just a few months ago, in February, the local government announced an initiative to invest over $1 billion in blockchain and fintech startups by 2022. This begs the question, will Seoul become one of the biggest adopters of the technology and rival other countries?
It's very much so. I mean, clearly they believe in blockchain. When it comes to the citizens' card, it's also interesting to see what that will do down the line to privacy. One can always argue. But when it comes to investment in the technology, they are, I think you're arguing correctly, they're ahead of the pack in many ways. Yeah. But that said, in the UK,
and the UK, the Financial Conduct Authority, or the FCA, reports that crypto investors in the country lost over $34 million due to crypto and Forex scams from 2018 to 2019. Per the report, the FCA is considering a ban on high-risk derivative products linked to crypto assets and cautions consumers. Scammers can be very convincing, so always do your own research into any firm you are considering investing with to make sure that they are the real deal. The FCA further cautioned that scammers use social media to target potential investors, noting that scams will often lure victims with pictures of celebrities with fake endorsements. Last year, the ICO Advisory Status Group released a study with the findings that found over 80% of ICOs in 2017 were scams. The associated losses for that year totaled $1.34 billion.
Well, 2017 was, to remind everybody, was of course also the year of the ICO, so to speak, which we all remember, that bubble that burst. But needless to say, obviously in the age of social media, always double check anything. All that said, Whitney, CryptoKitties.
Dapper Labs, the company behind your favorite CryptoKitties, has announced the launch of a new blockchain game called Cheeze Wizards. According to the report, it's a battle royale where players can summon wizards to fight in a duel for the big cheese. You can play this player versus player magical duel only if you have crypto, and gamers will own crypto collectibles called the Wizards, which they will be able to use to fight against other wizards during the tournament. The game allows for multiple wizards to be invited for a series of duels by using Ether. The winner of each tournament earns a title and the Ether that is collected in the tournament. Cheeze Wizards is currently in the pre-sale stage, so we're still waiting.
We're still waiting. The big cheese is very catchy. Interesting that Ether is so connected and interlaced with that, but fascinating to see. I think that's something that once it's launched, we're going to have Yona try out.
For sure.
Yes, indeed. But that said, moving along.
The SEC has decided once again to avoid making a decision about Bitcoin ETF. In a ruling published today, they revealed that an answer on the VanEck Solid X Bitcoin ETF would be postponed for another 90 days, pushing the deadline back to August 19th. This comes following last week's delay of the Bitwise Bitcoin ETF. Its decision to remain tight-lipped about the VanEck ETF has left many wondering what would happen, but the move doesn't come as a shocker, as avoidance seems to be the MO of the SEC. But they can't play the cat and mouse game forever. According to attorney Jake Chervinsky on Twitter, the fact that the SEC needed more time to issue its decision on the VanEck product was likely due to semantics. It seems as though they are just waiting as long as possible to drag this out until either there is a regulatory framework or the crypto community gives up, which isn't likely to happen.
Which isn't likely to happen, and it all boils down to terminology. One can only assume, but as Forbes is already calling it an asset. That said, very well put, because they decided currently not to decide. Whitney Deal, thank you so much. That was Blockheads for us here at BLOCKTV, which you should check out on every social platform that you have. Facebook, Twitter, Telegram, we're all over the place, and we'll be right back.